Hello everyone, welcome to my channel. This is Easy Accounting channel. Today we are studying IFRS 11, joint arrangements. A joint arrangement is an arrangement of which two or more parties have joint control. Characteristics are: parties are bound by a contractual agreement. Contractual agreement gives two or more of those parties joint control of the arrangement. Joint control. Joint control is the contractual agreed sharing of control of an arrangement, which exists only when decision about the relevant activities require the unanimous consent of the party sharing control. Before assessing whether an entity has joint control over an arrangement, an entity first assess whether the party or the group control the arrangement. After concluding that all the parties or the group of the parties control the arrangement, an entity shall assess whether it has control of the arrangement. Joint control exists only when decision about the relevant activity require the unanimous consent of the party that collectively control the arrangement. There are two types of joint arrangements. Number one, joint operation. Number two, joint venture. Joint operation is a joint arrangement whereby the party that have joint control of the arrangement have right to the assets, to the liability, and all the obligation relating to the arrangement. While joint venture is a joint arrangement whereby the parties that have joint control of the arrangement have rights to the net asset of the arrangement. So how do we classify them into joint operation and joint venture? A joint operation or a joint venture depends upon the rights and obligation of the party to the arrangement. The structure, the contractual agreement, and the form of arrangement and other facts and circumstances determine the type of joint arrangement. So let's now explain joint operation. The assets, including its share of any assets held jointly. The liability, including its share of any liability incurred jointly, and its revenue from the sale of its share of the output joint operation, and the share of the revenue from the sale of the output by the joint operation, and the expenses, including share of any expenses incurred jointly. So a joint operation accounts for the assets, the liabilities, the revenues, the expenses relating to its involvement in joint operation in accordance with the IFRS 11. Now let's explain joint venture. A joint venturer recognizes its interest in a joint venture as an investment and shall account for that investment using equity method in accordance with IAS 28, investment in associate and joint venture, unless the entity is exempted from applying the equity method as specified in that standard. So there should be separate financial statements The accounting for joint arrangement in an entity's separate financial statement depends on the involvement of the entity in that joint arrangement and the type of joint arrangement. So if the entity is a joint operator or joint venturer, it shall account for its interest in a joint operation or a joint venture in accordance with IAS 27, separate financial statement. However, there are no disclosures specified in IFRS 11. Instead, IFRS 12, disclosure of interest in other entity, outline disclosure required. Now, let's talk about the applicable and early adoption. So, IFRS 11 is applied to annual reporting beginning from 1st January 2013. So, when IFRS 11 is first applied, an entity need only present the quantitative information required by IAS 8 for the annual period immediately preceding the first annual period for which the standard is applied. So special transitional provision are required. Number 1, transition from proportionate consolidation to the equity method for joint venture, and then transition from the equity method to accounting for assets and liability for joint operation, and then transition in an entity's separate financial statement for a joint operation. So an entity may apply IFRS 11 to an earlier accounting period, but if doing so, it must disclose the fact about the adoption of the standard and must apply IFRS 10 consolidated financial statements, IFRS 12 disclosure of interest in other entity, IAS 27 separate financial statement, and IAS 28 investment in associates and joint venture. Thank you for coming to my channel. Please subscribe to my channel, and I hope to see you in my next video. Thank you. Bye.